Herd instinct in finance, or in human behavior in general, is a phenomenon where people follow what they perceive other people are doing. Rather than fully rely on their own judgments or analysis, people who exhibit herding instincts will gravitate toward the same or similar investments based almost solely on the fact that many others are supposedly doing the same thing. Herd instinct has a history of starting large, unfounded market rallies and sell-offs that are often based on a lack of fundamental support to justify either. The dot-com bubble of the late 1990s and early 2000s and this 2020 focused 5 tech stock mania are both prime examples of the ramifications of herd instincts and passive investment fund flows in the growth and eventual bursting of yet another financial bubble. This week we're going to look at where some of these investment herds are and where they are coming and or going. And 2, we'll delve a bit into the growing institutional investor class push for precious metals allocations, how that herding phenomenon is only just beginning now that $2,000 gold has arrived. Hello out there, this is James Anderson on behalf of SDBullion.com. Please take a moment to smash that like button below so we can induce this platform's algorithm to serve this content to more like-minded viewers around the world. Silver and gold spot prices finished slightly lower for the week as they continued to digest gains made at the start of this summer 2020. Good news this past month, August 2020, the US Mint has been increasingly striking more Silver Eagle coins, and thus silver bullion product price premiums appear to be in retreat and slimming down for now. It appears the US Mint is on pace to issue over 20 million American Silver Eagle coins before shutting down for this year's issuance. And here are the Fiat Federal Reserve Note fund flows into US Mint American Eagle gold and silver bullion coins to date. Notice how only 2/3 through this year 2020, the bid for gold Eagle coins has returned to near its post-2008 global financial crisis levels. The September stopped COMEX silver futures contract figure came in as the second largest amount over the last decade and a half of time, as by the end of this month, potentially over 42 million ounces of fractionally reserved silver bullion may swap ownership. Late last week, we were happy to learn, mostly being Ohio natives ourselves, that the Ohio Police and Fire Pension Fund has decided to allocate 5% of its nearly $16 billion portfolio into gold. While around $800 million from this fund chasing just over 12 metric tons of gold bullion may not sound like much, it is the trend that matters here. If institutional investors want to buy gold, there's a huge amount of mutual funds, pension funds, sovereign wealth funds, health insurance, hedge funds, private equity funds, and potential flows that could go toward gold, and only so much gold to go around. Eventually, if we see many flows come to gold, the price is going to have to rise exponentially. Silver and gold mining analyst Jeff Clark published some interesting news this week regarding both potential and already large institutional fund flows into the precious metals investment arena already in the first half of 2020. The potential of institutional flows to gold in a world of central banks wanting more inflation, while also pinning interest rates at 5,000-year low levels for many years to come. This trend has the ability to throttle gold and silver spot prices into a herd-driven mania to come. Here are some bullet points Jeff recently published that are of recent importance. He writes, "The shift has started. Unbeknown to many investors, in addition to Warren Buffett, a plethora of hedge funds entered the gold and silver market in the second quarter. Ray Dalio's hedge fund, Bridgewater Associates, poured over $400 million into gold ETFs in Q2. He increased holdings in GLD from $600.6 million to $914.3 million, making it one of the largest investors in the fund and Bridgewater's second most valuable holding. The company also increased its holding in the iShares Gold Trust from $176 million to $268.4 million, making this investment its 6th biggest stake. Hedge funds, Mason Capital Partners, Sandell Asset Management, and Caxton Associates all initiated new positions in GLD last quarter. The Reserve Bank of India announced its plans to increase its gold reserves to 10% of its total reserves from the current 6.5%. How much is this? The RBI has approximately 540 billion in cash. 3.5% of that equals 18.9 billion, which equates to 9.45 billion ounces, which is 56% of all the gold bought for investment last year. Though central bank gold buying this year is probably slower than 2019's banner year, the central banks in Kazakhstan, Turkey, Mongolia, India, Cambodia, Qatar, and Russia were all buyers last month. And then there was this big shocker. BlackRock, the world's largest asset manager, 7.4 trillion assets under management, was the second largest buyer of SLV shares in Q2, purchasing 5.4 million shares. As you can see, it wasn't just Buffett's 565 million purchase of BlackRock last quarter. Numerous other hedge funds apparently see what Warren sees, an environment ripe for big profits from gold. But there's a bigger impact than Berkshire Hathaway's entrance into the gold market will have, the message it sends to the market. His purchase removes the gold is bad stigma for investors, essentially opening the door for more generalist investors to move into this industry. Buffett is one of the most well-known investors in the world, so other investors are sure to follow. On the heels of last week's declaration by the private Federal Reserve Chairman that we need more inflation this decade, the corporate sector in the USA, drowning in debt, would likely agree high inflation is one way that they could easily pay off in the years upcoming the debts that they've accrued since the last 2008 GFC. Of note too, this past week, Reuters published an article citing just how much prices at grocery stores have been escalating in a mere month of time. Our friend Jesse Felder tweeted the painful brushstrokes you can see here. Congratulations to Jerome Powell. He and his private central bank are off to a hot inflationary start. This chart illustrates the change in U.S. consumer spending pre- and post-viral crisis economic lockdown. The dark blue line shows that American citizens are nowhere near spending what they once did before the viral crisis. Remember, too, that the U.S. economic engine is a consumer spending-driven affair. Yet grocery stores are making a mint, given that they have more pricing power perhaps than ever, and a large increase in consumer spending for home-cooked meals. In other words, Jeff Bezos wins again. Speaking of expensive stock prices, now having just recently come off the new nominal S&P 500 record level, this chart illustrates the post-2020 viral crisis rally in stocks has been based on 6 tech stocks ramping higher, including Amazon. Without their recent outperformance, the S&P 500 would still be negative for the year. Stock bulls, given that they are mostly older in age, as in 3/4 of the U.S. stock market is owned by shareholders aged 55 and older, they may want to take a look at insider stock sale now near record volumes for the month of August 2020, and perhaps think things through. You know, if management who operates these companies is selling at near record volumes, you might want to consider taking some profits too. Oh, and don't look now, but here comes the antitrust trend. On time to begin deflating this 2020's tech bubble versus gold and silver bullion. Maybe you don't think this chart is going to roll over, but myself and many of us here will be on the other side of that bet this decade. Not that anyone should go all in on bullion and precious metals, but rotating some profits into prudent bullion positions now is likely going to prove wise in the years upcoming. I'll leave a link in the comments below on why having up to 25% of one's investable net worth in gold bullion has made mathematical sense the last 50 years of full fiat currency era. The article contains information that could save an investment portfolio in the tumultuous years upcoming. It's information that the Ray Dalios and Warren Buffetts and other billionaires know and are increasingly allocating their investments accordingly. Well, that is all for this week. In case you missed it, I will leave our recent Platinum Bullion fundamental video at the end of this one, so you can click through and check that out if you like. And until next week, take great care of yourselves and those that you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.